The following is an update and technical analysis on some of the largest components to the Bitcoin mining sector based upon multiple outer layers on the daily realm. And here we are, banging on multi-year price resistance level, call it the biggest key inflection point since 2021 for Riot platforms. With a huge volume at price profile surge, we are beginning to break the 1291 price resistance, which now becomes support, and that has been a multi-year big time major reactionary high and reactionary low pivot point, with one intent for short sellers and or bear traders to defend at all costs, and an additional huge blowout in quarterly earning banking reports. This could be the beginning stages for any bulls and or long traders for a huge short squeeze right across equities, which could additionally rip into the cryptography markets. Short sellers, bear traders must heavily defend price resistance level really at all costs to avert an additional big breakthrough, pop that level, and take out some additional short squeezes up above. In confluence of a minor reactionary uptrend price resistance level, call it the back test to the primary uptrend line. Long traders, bull traders, they want to see a solidified, validated, solid, infused daily candle close tomorrow. Only additionally fueling in more shorts to panic and cover across the board and an all-out rush for the potential exits, as long traders and bull traders begin within the beginning stages of setting up what you call an inverse head and shoulder classic looking bottom. And that could be within the beginning stages of a nice clean divergent low. You have positive and or bullish divergences constructed with huge volume spikes around that key region, only validating that this level was key and psychological, where short sellers and additionally myself will begin to panic and begin to cover those shorts as we see additional major big time psychological levels begin to go. Taking you out tomorrow, one of the larger components to the Bitcoin mining sector. You have a nice clean divergent low, positive divergences, and that is your indeed one of the telltales and the signs of watching out when you are within the beginning stages of shorting any of these securities. Make no mistake about it, short sellers, bear traders must respect the fact that these positive and bullish divergences are still intact. You have a nice clean primary uptrend support level off the January 2023 lows with major multi-year reactionary lows really across that entire sphere. Make no mistake about it, within the moving average realm, we are within the biggest key inflection point in quite some time, with a 50-day moving average and the 200-day moving average intersect, which could be an additional breakdown as the 50-day undercuts into a bearish death cross continuation pattern, or additionally, it begins to be averted as long traders and or bull traders would like to see an additional validated sell buy signal close on a solid green infused red candle close up above these key averages, in which you would additionally spark potential buy signal. This route gives a validated risk reward ratio for any long traders and or bull traders who are bullish in the near term here within the next coming days, weeks to months on end. That could be the beginning stages of what you would call a nice clean near term divergent low, where you have an R side divergence, and then you additionally have just escalating odds on a move to the upside and a colossal short squeeze as 1891 price resistance could be taken out with conviction. Short sellers and or bear traders want to defend, call it a triple transitioning price resistance level in confluence of its 50-day, 200-day, and 1891 price resistance to avert and crash right back on an undercut of the primary uptrend price support level to revisit the 1612 handle for a 12.4% crash. Long traders want to take this level out, ultimately fueling a big time rally, challenging the 22 handle. Taking you out to MicroStrategy, the largest component to the Bitcoin exposure on Wall Street, where we had a nice clean validated breakdown sell signal, had a snapback counter trend rally right into price resistance, and that netted off with a sell-off worth 21% crash move to the downside, reflecting upon what you would call now a neckline to the head and shoulder classic looking top here. And this could be the beginning stages as we are now taking out, long traders and bull traders are taking the 50-day moving average and had a validated candle close into the final minutes with a huge volume at price profile, as I previously discussed in that range. As volatility begins to heat up, we are taking out a minor downtrend price resistance level and the 50-day moving average. Short sellers need to defend the 383.53 handle really at all costs to avert further buy signal damage, which could occur taking that level out on a re-challenge of the 439 handle, and that will be the ultimate final boss, key psychological big inflection point for any short sellers and or bear traders to defend heavily at all cost. If and when long traders and bull traders pop that level with conviction, which now becomes support, I would only anticipate an all-out scaling out process for shorts to cover and bear traders to rush towards the emergency exits as a rechallenging of all-time reactionary highs up above, and additionally at the 543 handle, which would increase the odds it enters once again escape velocity. Taking you to the spot price of Bitcoin on the daily, and we are testing a minor primary reactionary downtrend price resistance level. What is new, what has become so significant in the near term was this divergent low, bullish, that gave a check mark for the bulls here. Nice clean divergent low. You have positive and or bullish divergences with the complete crossover there. In the moving average convergence, you have oscillator divergence and stochastic screaming to the upside. Long traders, bull traders, they need to take this level, pop that level up, call it the final matchup tomorrow, the championship round. Taking that level out would only validate on a solid infused green candle close up above as a buy signal, and shorts to panic as they go on to recrease and try and defend, which we would call the 161 fibs handle at the 100,211 level. And that will be the biggest key inflection point in correlation of its all-time major reactionary highs. Short sellers at the last line in the sand would need to defend that level real at all costs. The risk-reward ratio moved to the downside, ultimately reflecting and re-challenging the 91,794 handle. Do not underestimate how powerful a short squeeze could ensue, ultimately trapping short sellers and bear traders into the most uncomfortable situation as they panic towards the emergency exit doors.